Welcome back. Just watching House Talks right here on ET now. Deepak Mohani as well as Prakash Gaba are still with us. So let's just get in their recommendations quickly this morning. Deepak, come to you first. What would it be that you're recommending?
I'm going with two buys and a short sale. Though the market is down, the moves are not likely to be very large. We seem to be getting into a narrow range in the last few days again. So anything that started to look up now has a fairly good chance of improving. The first of these buys is HCL Technologies with a stop loss of 530 and a target of 560. And Petronet LNG with a stop loss of 149 and a target of 158. The one short sale is a day trade in SAIL with a stop loss of 85 and a target of 82.
Okay, the first quarter numbers of GSPL, Gujarat State Petronet, also came out yesterday after market hours. The bottom line got hit by about 9%, but EBITDA was higher, and the transmission volume was also quite healthy, and that's why probably a lot of brokerages have reacted to the buy call. The stock is up 1.25% in today's trade. Manish Sheth, CFO of GSPL, joins in line from Gandhinagar. Mr. Sheth, thanks a lot for joining us. Explain to us first the reason for the bottom line hit of about 9%, and was it the transmission tariffs which helped you increase your EBITDA despite a hit on the bottom line?
Well, no, actually, if you see our transmission tariffs, transmission revenue is slightly down, mainly because volumes are down. And the slightly other income has also increased, which has contributed to a higher EBITDA. But overall, I think, our volumes have been down since last previous quarter. So I think that there is a trend which has continued in this quarter.
On the margin front, Mr. Sheth, you have seen some contraction. Now, where is the margin expected to stabilize? Using 95 is something that you could defend, or margins could go lower?
I think our margins have been in the range of 90, 92, 93%. I think they will continue. They should continue in the same range.
Mr. Sheth, there's a concern in the market, in the sector regarding your company that on the outlook as far as volumes is concerned, they are also saying that if the volumes are unable to increase significantly going forward, there could be a downside risk to your earnings. Allay those concerns for us.
Yeah, volumes have already been on a downward trend if you see our last maybe over 2 years. So volumes, at one time we were doing a peak volume of over 40 million. Now we are doing 31 million. So the impact of reduction volumes has already can be seen in our numbers. And so it's all already there.
But where do you see it stabilize? That's the point.
Well, I think a lot of volume which, because of domestic gas going down, has been replaced by LNG. And if the pricing of LNG available in the market is reasonable, then to a large extent that volume gets compensated. But if LNG prices also go up, then we see some kind of a downside.
Sir, are you witnessing growth over there as far as your clients are concerned, especially the industrial clients? What's the outlook there?
Yeah, if you see, we have had lower reduction in volumes as compared to domestic gas decline, mainly because of a lot of new industries coming on our network, and that is what has compensated for the fall in many of the other customers, including, for example, power customers. We have our CED companies which are expanding very rapidly and connecting new customers, every year. So which is a very big segment now, and I think that is what will continue to compensate for whatever reduction in volumes which is happening in other sectors.
All right, Mr. Sheth, we'll leave it at that. Thanks very much for joining us and giving us a quick perspective on your numbers. We'll take a short break right now on that note. In fact, come back and take recommendations from Prakash as well. Jindal Stainless and Ramesh Nair, the president and ED of the company, will join us in just moments from now.